Pinterest stock reset lower after news that a rumored M&A deal with Pinterest wasn't going to happen. And this actually got my interest, seeing that the stock dropped significantly. And I'm looking at it, fast-growing business, profitable, trading at an interesting valuation. So I'm starting to lick my chops and think, man, this might be pretty interesting. Let's dive right into Pinterest. What do they do in the current setup? If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, the types of stocks that could potentially go up hundreds or even thousands of percent over time. So here's the disclaimer, which you can read on your own time. So Pinterest stock reset about 13% lower today as PayPal denied the rumor that they were seeking an acquisition of Pinterest. And Pinterest stock had jumped recently on this very rumor. So they officially completely put the kibosh to it, saying, look, they are not pursuing an acquisition of Pinterest. So Pinterest stock fell about 13%. So this isn't the first time Pinterest has been subject to M&A speculation, as the Financial Times posted in February 2021 that Microsoft had also approached and walked away from a deal valuing Pinterest, or PINS is the ticker, around $51 billion, or about 45% plus higher than the current market cap. So that also starts smelling pretty interesting. Now, of course, once again, that's also speculative and rumored versus what's actually happened. So what is Pins, and is it cheap? What is Pinterest, and is it cheap? So in order to understand Pinterest, it's really this online visually oriented platform designed to help people with inspiration. It's used by hundreds of millions of viewers for things like cooking and travel, beauty, and DIY projects. A key aspect of their business is that it's about product discovery. So having shopping content or advertisements from brands doesn't necessarily interrupt the experience. If anything, it might actually add to it. One could argue this is sort of at odds with other major advertising platforms, where it's sort of disruptive to see the advertisement versus seeing the latest news of your friends. Now, their value proposition is clearly resonating with advertisers, as they grew revenue nearly 50% last year and are on track to continue growing 50% plus this year. So far, year to date, they've grown revenue over 100%. That's through the second quarter of 2021. That did include a weak quarter last year, so that's part of the reason why their growth numbers look so strong year to date. Now, while their monthly active users continue to grow, in the second quarter 21, their U.S. users actually declined by about 5%. Now, this is largely attributed to stay-at-home versus outdoor activities. Last year, everyone's ordered to stay at home because of COVID. This year, the economy's opening up more, and people are saying, well, wait a second, I don't need to do as many gardening or DIY projects, so I'm not spending as much time on Pinterest. Wall Street is especially sensitive to U.S. monthly active users, as they're economically worth 14x their international peers. So seeing a 5% decline really gets, Wall Street at the edge of their seat. And that's the main reason, I'd argue, why the stock has been in the penalty box over the last few months. Wall Street might also be concerned about management's desire to shift from a place to browse and shop to a more community-oriented platform where folks are sharing idea pins. This might sort of run in direct competition with some of the major other, social media platforms. And so, this could be leaving sort of their core value proposition by sort of moving more and more into a community-oriented position. Might be less of a value proposition for the end users. And I think they do have a very strong value proposition with the way they're oriented about these pins and people sort of going there just to look at it. It's a very different type of experience than going to other social media platforms. There's also been top-level changes that have gotten Wall Street nervous. Evan Sharp, a co-founder and chief design and creative officer, announced that he was effectively leaving the company, transitioning into an advisory role. Okay, so this, you see all these data points, you see significant growth, you see I'd argue, a strong visual platform, a global platform, but you also see, a little bit of hair on it, making folks wonder, okay, this might be the reason why it's at a discount. So what about the valuation? Is it actually compelling from here, especially as it's sold off recently? So first, I'm going to do a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, or each month I call out potential multi-baggers as well as a portfolio update. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, if you're interested, in trying to find these potential multi-baggers and joining this dedicated community, go to unrivaledinvesting.com, click join the journey. And obviously, if you enjoy these types of videos, learning about potential multi-baggers, please make a point of hitting that subscribe button. And so as we look at it, I like to see that they're already well on their way to having a lucrative ad-driven business model. This is a profitable business model, and they're growing at hyperspeed, 50%, 100% year to date. So this is what I like to see. I like to see that they're already there, even backing out stock-based compensation, they're doing well. And so based on a hypothetical framework, the upside potential with pins is actually quite reasonable. Based on a range of scenarios, I'm effectively penciling out 30% upside to nearly 200% upside over the next 5 years. Now, of course, the stock price can go way higher or lower, but relative to many stocks I look at, this is actually quite reasonable. I'd argue it's not as attractive as the October potential multi-bagger that I exclusively called out for Journey subscribers just yesterday, but still, this is quite reasonable, quite good. You're looking at a company, and I might even be, end up being conservative on this, saying 30 to 35% optimized margins long term, saying effectively that they could grow over the next 5 years in a range of, let's say, 30, low 30s to high 30% compounding, and an N multiple of 20 to 30 times earnings can get you to nearly 200% upside. And they have, significant cash flow, and they do have a lot of cash on their balance sheet. So I'm looking at this and I'm thinking this is actually quite reasonable. I personally own things that I think have better upside potential, but this definitely makes me want to think more about pins. And if you have, either Pinterest as part of your investment journey, or you've made a big, bold call making a large allocation, or you believe there's a thesis that Wall Street's largely overlooking, please leave a comment below, because I'm intrigued by this valuation, in all honesty. Not a lot of stocks have what I'd argue is a strong value proposition. Hyper growth, growing 100% year to date, 50%, looking like around 50% growth for this year, and likely continued strong growth in the years ahead. I'm thinking, wow, this is actually quite interesting. So if you have a take on it, definitely love to hear it. If this video has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up. Thanks so much for watching.